Knowing that trading is 80% emotional and 20% technical. So psychology can wreck on your trading days, right? Even the best technical analysts will be poor traders if they let emotions get in the way of the market. What are the key influences on the market? Is it geopolitical? Is it fundamental, such as earnings? Or a theme such as, cybersecurity hack or on a large corporation? Right now we are in an AI bubble, or we have the war going on. Is it US housing data, consumer confidence, employment, inflation? If I'm putting $500 on the line, am I okay with losing $100? Where am I taking profit? If I am in certain amount of profits, move my stop loss to break even. Have all those answers beforehand before you jump into a trade. So today I'm going to share some very basic ideas when it comes to trading. Okay, if somebody is thinking about getting into day trading or somebody's already in it, these are some of the basic things I really want you to understand or implement in your trading. So first of all, there is no guarantee when it comes to trading. There is no perfect setup. The best we can hope for is that the conditions make it so that taking a trade is in your favor. So what must you know in order to trade with success? Number one, understand charts. The best book to read for this, in my opinion, is by Anna Calling. It's a complete guide to volume price analysis. If you don't have a copy, you can message me or send us a DM and we'll send you a PDF. This book will allow you to better understand reading charts, as well as understanding the relationship between volume and charting. So I suggest you read it multiple times before you start trading. Number two, knowing that trading is 80% emotional and 20% technical. So psychology can wreck on your trading days, right? Even the best technical analysts will be poor traders if they let emotions get in the way of the market, right? So the best book I have encouraged pretty much everyone in our community is Trading in the Zone by Mark Douglas. Again, if you need a copy of it, message us, we'll send you the PDF for it. Number three is candlestick patterns are one of the ways technical analysis works. You must be familiar with the types of candles available and how to best interpret them. Once you understand the fundamentals of the charts, you must then start paper trading. In Canada, you can do it in IBKR, Weevil, they all have it. I highly suggest that you do it at least for 1 month. If you can do 2, that's awesome, because that's where you're gonna learn all your mistakes. The biggest thing is you're gonna learn how to use your brokerage, and you're gonna make all those mistakes in your paper trading account. Okay, test your skills without putting your real money at risk. Now, once you're ready to chart, make sure you are familiar with the key levels, support and resistance, supply and demand. And there are a lot of information that's available online. One of the best websites that you can use is called priceaction.com, and they have a lot of information when it comes to support and resistance levels. So make sure you have all your levels marked. You can do it, if you're a swing trader, do them on the weekend. If you're a day trader, make sure you're reviewing your charts. Are the levels still valid? Is the market structure still holding it? Is it still in the trend that I am watching for it, right? So start with your daily chart and then move all the way down to the 1 hour to mark your shorter time frame levels on it. I would honestly stay away from marking the 5-minute or marking the 1 minute. I've seen people try to trade on the 1 minute. You are gonna get faked out. So please try to stay away from that. And as long as you can, anything higher than 3 minutes is usually good for day traders. because now you will have, once you have your levels marked, you will have a better idea of where to anticipate the, it could get a rejection or it could bounce from it, and how the price action is moving throughout the day. It can really help you. Number 4 is, now what's the story? I'm a big fan of the big picture. So what does that mean? As the market is unfolding throughout the day and week, ask yourself, what are the key influences on the market? Is it geopolitical? Is it fundamental, such as earnings, or a theme such as, cybersecurity hack or on a large corporation, or like right now we are in an AI bubble, or we have the war going on? Is it US housing data, consumer confidence, employment, inflation? There is always an underlying theme for it. Once you find those themes and you ask yourself, how serious is this going to influence? For instance, recently we have this whole war situations that's been going on with the oil and everything. It was a pretty significant. We saw the market react to it. Now you need to think about it. How does this whole scheme of things affect the market? Yeah, it's sad. We're seeing people getting killed and all those things happening in the world. But if you are in the market, you really need to understand all these things, what's happening. Will there be complications, issues, criticism on the foreign policies? But how does it affect the market? So all those things you need to know. But knowing how is that going to affect the market? So think out of the box. Look at the bigger picture. Don't build a bias just because we are in a war that we cannot be only dropping. We've seen market is making all-time highs, right? And then it comes to, what about the earnings? Is it microeconomic issues? Is it a sector specific? Is it specifically just for that company that we are seeing, some CEO left, or CEO is changing, or buybacks are happening? All those things do affect when you are taking those trades, when you are making your decisions. So you have to know what you think the best idea is for the trading day, and what kind of a trading environment is set up for you. Is it bullish? Is it bearish? Or is it something that you're not sure, so you're gonna sit on your hands, and that's okay, right? It could be we are in a sideways price action and we see a chop. So you really need to understand the whole picture on it, what is happening. So take a seat back and think about it before you decide to take a trade, or before you even decide to jump into the market, right? It's always best to know what is happening before you decide. And then the last part, the very important part, is how much capital am I risking per trade? Having that knowing up front is going to save you so much headache. Where am I cutting? If I'm putting $500 on the line, am I okay with losing $100? Where am I taking profit? Am I taking a percentage profit, or am I taking a level profit, right? If I am in certain amount of profits, move my stop loss to break even. Like, have all those answers beforehand before you jump into a trade, because trust me, you will protect your capital. And then stick to those rules. Don't let them, change just because now you feel like the stock's gonna do this, or I think it's gonna bounce from here, let me move my stop loss a little bit more. Don't do any of those things. Stick to the plan. It is hard. If you are not bored in your trading, you are not gonna win. You must be bored when it comes to trading. You shouldn't be excited about it. I want to find good quality trades. I don't want to be jumping into every red and green candles. Follow the rules. Have a plan. Make sure those key levels you plot it on the chart, you plot it for a reason, right? Don't let them now be like, oh, most likely it's going to break out. Oh, we're almost there, let me jump in. don't do any of those things. So please take your time if you want to be in this market for long term. Okay, I hope this helps you guys, and I will see you guys in the next video. If you've liked, please don't forget to like and subscribe.